Pete, Alphabet recently reported earnings, and on the earnings, they announced a $5 billion cash infusion into Waymo. Sundar Pichai, CEO of Alphabet and Google, he's getting bullish on Waymo. What do you think of that?
No doubt, Grayson. I thought that was the most interesting part of the Alphabet earnings report. Obviously, I'm looking at it from the Waymo vantage point to begin with, but a $5 billion investment over multiple years. Clearly, a vote in confidence that robotaxis are for real, that Waymo's growth will continue. There's obviously scaffolding in place for this big expansion that's about to happen across the San Francisco Peninsula, throughout Los Angeles County and Austin, Texas by the end of the year. And this seems to give them the concrete to finish the job now, and then we can start to imagine and pontificate as to what happens next. But no doubt this is a big vote in confidence for robotaxis, for both that they work and for the business model, I think.
It's becoming a business, and based on what Mr. Pichai said, I ran some numbers, and I'm going to run you some numbers because this is the fun part of this. So in San Francisco and Phoenix, Waymo's completing more than 50,000 weekly paid rides. That was announced on the earnings call. So me being me, I ran some math. With an average fare of $15 per ride, Waymo could be generating $750,000 a week in revenue. Over the course of 12 months, Waymo's annual revenue from operations in San Francisco and Phoenix would be $39.17 million. That's not bad. It's starting to become a business. If 25,000 rides per week occurred in both San Francisco and Phoenix at an average rate of $15 per ride, could be higher, could be lower, but we did 15 for the math, Waymo will be generating on average $1.6 million per city per month for a yearly average revenue per city of $19.5 million. And now let's add in LA, as the CEO of Waymo, co-CEO Tiku, came out and said it's going to be a potential billion-dollar market. I didn't believe it until I started running the math. And we got some math from the MTA in San Francisco from NLADOT. Between September 2019 to August 2020, 247.7 million TNC rides on average occurred in California. 64% of those rides took place in Los Angeles, San Francisco, and San Diego counties. In California, Los Angeles is the largest TNC market, accounting for over 114.9 million trips, followed by San Francisco, 38.52 million trips. Okay, so let's get more into the data here. If Waymo is able to successfully capture 10% of the LA TNC market, that's 9.75 million rides annually, LA becomes $143.6 million a year revenue opportunity for Waymo. And then let's add in a 10% market share of San Francisco. LA and San Francisco combined become a $149.4 million a year revenue opportunity for Waymo. That's two cities with 10% market share. The math adds up.
And 10% market share over the long term seems like a conservative estimate, as does $15 average per ride. I think, there's probably cases that we could argue you could make more optimistic estimates on those, and then that business becomes all the more real. Now, we don't know exactly how much they're spending. Obviously, Alphabet's other bets still losing money, and I'd be interested to see where they net out. But no doubt that, as you've described, there's real revenue there. And I think that's been a question of, does this business model work? Is there enough utilization uptime to make this worthwhile? I think, at least here in the very early going, the numbers that you have pulled would suggest yes.
It does. And you add on Austin, which I don't have the data on yet. You add on potentially Nashville, which is the fastest growing luxury housing market in the United States. And then you add on Miami, and you perhaps add on Atlanta. Waymo could be looking at a $500 million a year business. So that's a real business, and I don't feel that they're getting enough credit for it. We had years ago the TCI fund letter, and I'm going to paraphrase TCI. Oh, Waymo's not going to be a business. You have to cut spending. Well, to the folks at TCI, I did some more data numbers. So you say, okay, so Waymo's collectively spent, credit this to Wolf Research here, $30 billion on Waymo. It might seem like a lot, but it's not. Apple, with the Vision Pro, has been reported they spent $20 billion to ship less than 100,000 units. That's called a flop, not a product, not a business. And then you compare that to Meta, formerly known as Facebook. Over the last 4 years, they spent $45 billion developing the metaverse. So here's Alphabet over the course of Waymo spent $30 billion. Meta spent $45 billion building the metaverse, and Apple spent $20 billion building a flop known as Vision Pro. Alphabet's winning.
That's really interesting, Grayson, especially you think about the idea that putting a car into the physical world in a safety critical manner is a far harder endeavor than building the metaverse and Apple Vision Pro. I think essentially consumer goods that are not safety critical. So to bite off the harder challenge, which I think if I have a criticism of Silicon Valley overall right now, it's like I'd like to see people solving real world problems, and perhaps there's even money to be made doing exactly that versus the things that are not that.
Waymo's solving a real world problem. There's a really interesting article in the LA Times this morning around racism, which was fascinating as relates to Waymo. There was a Spanish American woman who went for a ride in the Waymo vehicle in Los Angeles. Then the LA Times asked her, "What do you think of the ride?" It didn't discriminate against me. She said, "Sometimes when I get picked up from my neighborhood and I get in the vehicle, nobody wants to pick me up. The Uber driver cancels." She goes, "The Waymo driver discriminated against me. It picked me up." That's game changing.
No question. And one of my most interesting takeaways, I was in San Francisco last month riding Waymos, among other things. And one of my biggest takeaways was that women feel safer in the autonomous car because they don't have a creepy ride hailing driver making them feel uncomfortable or potentially taking them places they don't want to go or a different route. They felt much more comfortable from a personal safety perspective with no driver as opposed to a ride hailing driver. And I think Waymo has some internal data that they shared where more than half of their customers right now say that they feel a sense of personal safety as an occupant that's more than a traditional ride hailing vehicle. So add on what you just said, and there are real world pain points that are being solved here beyond transportation itself, right?
Then there's the senior citizen element. When Oliver Cameron was running Voyage, he invited me to the villages and we went for a ride. And I would ask these individuals, why? Why do you want to use the Voyage autonomous vehicle? You won't attack me. There's no driver to attack me. I'm feeble. I can't necessarily defend myself. You add in that element to it. Autonomy, by removing the driver, it changes the ballgame. Think about the positive mental health benefits that come from this. If you're a woman, you don't have to worry about getting attacked. If you're a senior citizen, you have to worry getting attacked. You're going to get to your destination a lot stressed out. Think about the mobility and the economic increases of going from neighborhood to neighborhood. It completely changes the game, but yet it's not discussed enough. It's a lot of positivity there.
There is, and that's very different than us talking about, boy, like the average Waymo vehicle is probably north of $200,000, and that's a hard sell compared to Joe the Uber driver with his banged up Toyota Camry or something like that. I think we may have talked about that the last time I was on the podcast here. Like, this is a new thread we can pull on is, yes, there are reasons why someone may look to the automated vehicle beyond that cost. And one of my other takeaways from my San Francisco trip, I was often comparing the price of what's a Waymo ride going to be, what's the Uber ride going to be. And I know there's a general thought out there that there's premium for the self-driving vehicles right now. I probably have too small of a sample size to definitively say that, but sometimes it seems like there's no rhyme or reason. I'd say 3 of my rides, the Uber was slightly cheaper, but then there were 1 or 2 where that was not the case. And then there was one where like the Uber was $45 and the Waymo was like 22 or something like that. But it is a significant discrepancy. So like that's another area where I think it's probably too early to tell, but certainly I want to study more closely as service rolls out is just the price point and time to pick up as well. I think that's going to be another key differentiator when people are ultimately choosing which ride they're going to take.
Time to pick up will be key in the future. Today, riding in a Waymo is an experience. And it's a consistent experience. That's what it's not talked about. You get in an Uber, life is like a box of chocolates. I'm paraphrasing Forrest Gump. You don't know what you're going to get. You don't know what you're going to get in Uber. The San Francisco Chronicle did a side-by-side comparison. It was really fascinating. And then one individual reporter rode around the day in Waymos and one individual rode around in Ubers. The big takeaway from that, and this is going into the safety argument, they would get to a yellow light. The individual, the reporter in the Ubers, said the drivers would floor it. That's scary. The Waymo was cautiously stopped. And then the gentleman said, "We got a chatty driver, smelly car, dirty car, clean car." Well, on the Waymo side, it always stopped at the red light, was always clean, a consistent product. That could end up winning at the end of the day. I've always said this about Uber. When they introduced UberX, I was always concerned about the degraded product, and obviously it turned out to be a huge success for them. But it's still, there's no product consistency there, and Waymo fills the void of product consistency. If you get the same price, same time, you're going to go to Waymo 9 out of 10 times.
You know what else I got out of Waymo was a sense of serenity and tranquility. It was almost a break in the middle of a busy day. It's like they kind of got the, I don't know what you would call it, like the new agey music playing. I feel like raindrops coming down. Like it's what it sounds like. And like on one of my rides, I fell asleep, but it was just like, I'm back there, I'm checking email. I felt very relaxed, and that irrelevant of a safety discussion, which is a separate thing, but just as a user experience, it was easy and it made me feel really relaxed. And I feel like, to your point, an Uber can make me feel that way, but I've fallen asleep in the back of the Uber before on the way home from the airport, as we probably all have. But that's an inconsistent experience, to your point.
And the driving behavior is inconsistently there. Waymo's going to have a vehicle problem, though. Come December, the Jaguar I-Pace is being discontinued. They're going to the Zeekr vehicle, but it's a Chinese vehicle. You have tariffs. You have the AV law around software coming out, which Waymo's petitioning. Waymo and Alphabet, for the case, they have the balance sheet to do anything they want. Why pick a Chinese manufactured vehicle, especially in this political climate? Do you think it was cost, or what drove that? Because to me, they didn't look at the data. There's a Pew Research survey that came out that 81% of US adults currently view China unfavorably, which raises the question, would you go for a ride in a Chinese vehicle? Would you put your family in a Chinese vehicle? It seemed that Waymo missed that large data point there as they fully went all in on the Zeekr.
I would put myself and my family in a Chinese vehicle, but I think what's changed is the political climate. If you go back to, what was it, November of 22 when they rolled out the partnership with Geely and Zeekr, I feel like a lot has changed. Certainly the White House tariffs enacted just a month or two ago, and that's obviously the big dagger right now. But I don't necessarily feel like, I feel like we're in a different place politically than we were back when this was made. And maybe they should have had some foresight to realize that there's at least going to be some uncertainty about importing these vehicles from China. Obviously, there was already a tariff in place, and now it's 100% on electric vehicles coming from China. And that threatens, I think, to wipe out a lot of the cost savings they anticipated as they moved to the Zeekr Robotaxis. When I talked to Waymo's chief product officer, Saswat Panagrahi, in May, maybe it was April or May, it was right before the tariffs were announced, essentially. But he said that they expected an order of magnitude of cost savings going from JLR, I-Pace to their own co-developed robotaxi. So I don't know what happens with that right now. I think that's a big question mark, is does Waymo search for a new partner?
I have to.
Yeah, they better have that at least in their pocket. They're like, do they go back to Stellantis and the Pacifica in some way? And nobody's told me that. That's just me, speculating, to be totally transparent here. But that would seem to be one course of action here as they kind of sort out the future. And it's interesting too, it also comes as GM discontinues the Origin, at least indefinitely pauses it. So suddenly you have two of the big players with big questions about what their long-term vehicle platform is.
Then you have Zoox. That vehicle's not going to last. It's not going to scale because society has fundamentally changed. If you look at the Cruise Origin, I give a lot of credit to Miss Mary Barra and the GM board for making the decision to kill the Origin. It was the right decision, despite what Kyle Vogt said. He's fundamentally incorrect. GM did make the right decision. Amazon's going to have to make the same decision with Zoox and kill the vehicle because nobody wants to face one another. What GM did right when they built the Origin, there was actually a lot of room in there. You get in the Zoox vehicle, it feels like you're in a SpaceX capsule. It's a cocoon. It's tight. Yes, they built all the safety implications. I don't want to go in there and share it with anybody. I want to be by myself. I think the days of the shared autonomy are over. GM made the right decision to take the $500 million write-off now. Amazon's going to have to do the same thing with Zoox and pivot their platform. Waymo's going to have to pivot their platform. It seems that we're going to have a whole new vehicle set in the next coming years.
Oh boy, there's a lot to jump into there, Grayson. I don't know that. So I rode in the Zoox vehicle when I was out in the Bay Area as well. And I actually kind of enjoyed so I was with some folks from Zoox, to be transparent. It wasn't like I was riding with members of the average public, which is a different discussion. But I kind of like the carriage style seating setup of the Zoox Robotaxi. And if I was in that with my family or friends, we've kind of talked about before, like, what if you were in Vegas where they're testing and plan to deploy, and you're riding around Vegas with your friends in the Zoox vehicle, and maybe there's some sort of entertainment options. I enjoyed actually talking to people. It was a very different experience than falling asleep in the Waymo vehicle, which I enjoyed for its own reasons. But chatting, it was kind of a nice time in the Zoox vehicle. I do hear what you're saying about it being a little cramped compared to Origin, though. Like 4 people in there's a lot. If you're talking 4 strangers, that you do bring up an interesting point. I am curious, in a real world setting, how often are the rides really going to be shared, and how many people will choose not to share a ride? Because I feel like, to your point, shared transportation in the United States does not have a robust track record. And I could definitely see the Zoox vehicle being well utilized, but I might choose to go alone or use it when I'm with friends.
Yeah, I could see that. I would say, I'll give you a number. I'm a very brutal. Less than 3% of the time it's going to be shared.
That sounds about right to me. By strangers. I think that's a key differentiator. Shared by strangers, not shared by people who might be in your group, be that family or friends.
So if you and I are out and about, yeah, we're going to share it together, but I'm not going with a stranger. No way, Jose. Plain and simple. Not going to happen. 97%, 90% of the public's going to agree with me. They're not going to share it. If Zoox built this whole thing, this whole model, mobility is to be shared, give me a break.
Remember Ford's Chariot?
Oh, yeah, that imploded. Ali's a nice guy, but that imploded. It never, well, the business case was a lot of issues of why Ford Chariot imploded, but it imploded. Mobility is not going to be shared. Mobility is going to be personally owned. It's going to be private. You saw in the earnings call from GM, Mary Barra talked about it, that they're going to develop personally owned autonomous vehicle. That's where this is going. Yes, well, could you have a shared mobility where you and I are out there in Vegas and we're going to go from the Wynn to the Bellagio to have dinner at Spago? Yes, but are we going to pick up some random drunk person on the strip? Hell no. We're not going to do that. Nobody's going to do that. If you're going to force somebody to share, you're going to force your business to implode. That's where this is going to come. You cannot put politics ahead of operating a business. And I just feel that if you look at where Zoox is today, they fundamentally fumble. They're at the 5-yard line and they fumble the ball. They can't get into the end zone because when Cruise had their hiccup, Zoox could have easily moved up, and they did move up on the autonomy leaderboard. They moved to number 2, but then they fumbled it. And now Cruise is back at number 2 in the leaderboard. They didn't make decisions. They're just testing. They're not making a business case. They're not messaging. I publicly call on Andy Jassy, and I'll publicly call on Mr. Jassy again. Make the case to Amazon shareholders why you should continue to invest in Zoox and add some transparency. Google has invested $30 billion, Mr. Jassy, and they've got a winning product. Amazon bought Zoox for roughly $1 billion. You don't have a winning product. What is the strategy? Does Zoox become another version of Amazon Alexa for you, where you're losing $10 billion a year, Mr. Jassy? I think it's time that we have some transparency for shareholders of where Zoox is going.
Could you make the case, Grayson, that Alphabet has invested $30 billion in Waymo over the years, and that Zoox is simply a similar long-term bet that isn't quite ready yet, but maybe Waymo has this early lead here in 2024, but it's early. And is it really going to matter that the Zoox vehicle, let's say, doesn't really reach scale until, and I'm just speculating again because they've been very cagey about when they're going to reach scale, but let's say it's 2026, 2027. Like looking back in 20, 30 years from now, is this 2 or 3 year head start that Waymo has at meaningful scale going to matter? A little bit now, but if Amazon is committed to Zoox and believes they have a winning product and they're heads down now, don't worry about the short term, and they roll something out that's fantastic, expected to start later this year, but let's say they reach some sort of similar scale later, maybe this is like just a similar dynamic to the Alphabet Waymo one. It's just offset by a few years. But maybe you're right, though, that like make the case of where this is going.
If you make that argument, which is a very valid argument, I'm not sitting here pontificating or guaranteeing that Waymo will be the leader 5 years from now. I think very much it could be Cruise. I'm uncertain, or it could be another company that emerges. We just don't know. It could be Wave. Wave could have a major technical breakthrough. We don't know who's going to be winning in autonomy 5 years from now. But as the CEO of a publicly traded company, you have to make it known to shareholders that you're committed. Mr. Pichai, the CEO of Alphabet and Google, on his opening remarks in the earnings call, he's publicly giving Waymo statistics. He publicly announced that Waymo has completed more than 2 million trips and driven more than 20 million fully autonomous miles on public roads and completing 50,000 weekly paid rides. That was the opening statements to an earning call. Mr. Pichai is not making that statements if he's not bullish on Waymo. Or Mr. Jassy has not made any public statements. I read the last quarterly filings. Obviously, we have earnings coming out next week. I'd like to see some sort of mention for Zoox, either in the investor deck, some sort of on the earnings call. The analysts aren't even asking questions. It's a black box that needs clarity. Could I be 100% wrong on where I think Zoox is? 100%. All I'm asking for is some sort of clarity and insight into the business as you invest these billions of dollars.
And it's not a small business. I think when I looked this past spring, they had roughly 2,300 employees with about 250 more job openings posted. So you start doing the math, and you're not talking about pocket change on or a research and development project. This is a major endeavor, even for the likes of Amazon. I'm curious, Grayson, like to go back to your idea, let's assume for a moment that the Origin and the Zoox Robotaxi are the wrong form factors for autonomy because people don't want shared vehicles. Or let's say how many, even among current ride hailing trips, like how many are 1 or 2 passenger trips versus 3 or 4 where you need this bigger car? Like, does someone come out with a form factor like the Rimac Robotaxi that is more cost effective, more efficient to operate, and gets the job done in a way that is more appealing to the market? And I think that's something we've not seen much of. It's been more the toaster model. And it's interesting too, because as I think about that, like Europe seems the right place where they'd be more willing to experiment with a different form factor. And the US, I don't know that would necessarily be accepted as much. If you're going to say, I'm going to ride in this much smaller vehicle on the 101 while I'm going to SFO with my bags, I don't know. Like if, you include the airport runs, because those are the most profitable ride hailing trips. I don't know. You could start to design a different vehicle here, but it would also have to be deemed roadworthy in the minds of consumers as well.
Experiences. That's what Rimac got. They got it right. It's an experience. If you make it the Netflix mobile and the front screen becomes augmented and you can watch Netflix, or you can Netflix and chill, okay, that's interesting. That's an experience that consumers will want. The design, the form factor, don't necessarily is going to be the defining factor for consumers. I believe it's going to be the experience. What can you do in the vehicles? The early days, I remember, if you remember this, CES years and years ago, Panasonic had a version of a shuttle, and you're going to sit in there, do work and do PowerPoints. No, you're not. You're going to sit there and you're going to want to watch movies or goof off on your phone. And that's what Rimac gets. I don't think Rimac, the Vern, is going to scale the way they wanted to. I like the design of the vehicle. I give them a lot of credit for pushing design envelopes. I just think the business structure does not make fundamental economic sense. But in America, could we have a similar form factor to the Vert? Yes. But who's going to have the cojones to implement it? Becomes the question. And I don't think you're going to see that for at least 2 decades, just because this is going to come down to cost. And that we have the new version of the Bolt, which is now going to run on Cruise. Everything's turning down to economics. And once we get past the economic case of scaling and operating profitably, then you're going to start to see new form factors. But until then, you're going to have traditional form factors that are all going to be dictated by cost. We saw that with GM with the Bolt, now for Cruise, the new version, and we're seeing that with Zeekr, with Waymo. It's all going to come down to cost.
Especially with legacy automakers struggling right now. Like I don't see anyone necessarily opening up a big R&D project into the second generation robotaxi vehicle as they struggle with current day economics.
Yeah, it's not going to come. If you look at the economics of robotaxi, and this is absolutely fascinating. We have numbers we can project because Waymo has given us data on number of rides, and so we can make economic projections. We used to be able to make economic projections with Cruise, and now that's going to start. Bloomberg's reporting, David Wells from Bloomberg's reporting that in 2025, Cruise will start introducing fully autonomous rides in Dallas and Houston. That's interesting, and hopefully GM puts some metrics out that we completed 50,000 rides, 20,000 rides, whatever. So we can start to benchmark that. Getting back to Zoox, how did Cruise go through a major hiccup, come back, and is already on the path to generating revenue again when Zoox has no path to revenue?
Well, there's 2 assumptions there. One is that Zoox has no path to revenue, and I think that they do as they start to think about starting in Vegas later this year, and that's the start. Let's see how many rides, we're talking this time next year. How many rides have they done in Vegas? I want to know. The second part of the assumption there, I think, Grayson, is that, GM is starting to drive in 3 cities with human safety drivers still aboard. And now they don't have Origin. So we're back to looking at the economics of the Bolt. But what's to say that this is going to continue to go forward? I feel like GM has kind of hedged its bets overall with Cruise. Like they anteed up for 850 more in investment in those small amounts last month, and killing Origin. I kind of feel like GM is saying like they're a cool customer. Like they're going to continue to inch forward, but I don't know yet that they've decided like they're in for the long term again. And I think especially with Cruise, like one more incident could be, they've barely made it through this one. Like, what's to say one more incident wouldn't be the point where GM says, like, all right, we're not doing this anymore. They're going to license their software from Tesla. Elon's talking a lot about major OEMs who are interested in licensing FSD. Maybe that's GM's big hedge there. I don't know.
We might as well queue up the meatloaf when hell froze over.
Speaking of, probably not, because Elon was on the Tesla quarterly earnings call this week, was disparaging GM for killing Origin, saying their technology wasn't on par. And that was the second punch GM took, as you alluded to earlier. Kyle Vogt, former Cruise CEO, really issuing a rebuke, you might say, to GM for killing the Origin and saying they find themselves with a 5-10 year lead often, and then they always find a reason to like kill the project, citing EV1. So I thought it was interesting that both of them were kind of punching at GM this week, but maybe Elon was trying to set the stage for an FSD licensing agreement. We'll see. Who knows?
GM made the right decision to kill the Origin. It was the right decision. When you look at licensing from FSD, it's going to happen. It's going to happen. Like Elon, hate Elon, miss a deadline, make a deadline. Who cares about a deadline? They're going to pull it off. That's the parlor game. Who ends up licensing FSD? They are going to get a partner at some point to license it. And then I believe that becomes the defining factor of an individual buying a vehicle, potentially, if it has the FSD on it. Who do you think that they license FSD to?
I don't know. I feel like Tesla versus Mobileye to license your system shapes up as a battle we'll be talking about 5 years from now, maybe. But I don't honestly think it's GM, because I feel like they think they've got enough there between Cruise, which they've talked about also, as you mentioned before, Mary's talked about potentially using Cruise technology in personally owned vehicles. They've got a really good thing going with Super Cruise right now, and I'll be very curious over the long term to see how those two things come together. So I don't think it's GM. Who can we cross off is probably the best way to get to who might Tesla license FSD to. But I'll start by saying I don't think it's GM.
I'll give you two curveballs: Ford and VW. Ford can't figure out how to get out of their way on EVs. Maybe there's a battery license technology and a FSD licensing. And then I don't see this relationship with Rivian going very far at VW. Maybe it's VW and Ford. They both don't have autonomy programs that work.
Well, I mean, this would go back to Mobileye in a way. Ford is using Mobileye for its Blue Cruise system, and VW is using Mobileye for its self-driving systems level on the ID4 that's testing now in Austin. And I think that relationship is deep for now. I'm trying to think of how they forged it, but they both kind of agree that it's deep for now, but they're not exclusive necessarily. So yeah, I see Mobileye as an alternative in that space, and we could argue about whose system is better. That's a different topic, but maybe, although I see Ford and VW currently in the Mobileye camp. So I would not immediately think they are candidates for FSD licensing unless they're dissatisfied with Mobileye.
There's a little thing called shareholders. Mobileye stock's down 54% year to date. Then if you're in Ford shoes and you're in VW shoes, you need to Hail Mary. You have to do something dramatic to reposition the company as a leader. This instantly would propel them as a leader and completely change the narrative around their technology that they're developing in-house. I don't think Mobileye is the answer. Mobileye is not going to move the market. Mobileye is not going to build investor confidence. Tesla, while it comes with baggage, will.
I feel like you are. So, do you want to trade a short-term bump for who's the better partner long-term? Who has the better technology that is going to withstand real-world vetting? There's a lot of questions about Tesla full self-driving right now. It's clearly much better in the latest iteration than it has been in the past. But when is Elon rolling out his Robotaxi? Like, remember last time we talked, Grayson? It was supposed to be August 8th, and we said, like, great, Elon's made promises before. Let's see if he keeps them. And now it's not August 8th. It's October. What are we seeing in October? When is it going to be deployed? How well does it really work in the real world? If it's pedalless and doesn't have traditional human controls, then it needs an exemption from the Federal Motor Vehicle Safety Standards to be on the road, unless they try to go the same path that Zoox is taking, where they just say, nope, we're self-certifying that this meets standards. We double dog dare you to tell us it doesn't. So at the that was the Tesla vehicle side of things, not the software. I kind of went down a path there, but backing up to the initial discussion, there's a lot of question marks about FSD, I think, and I want to see how it works in the real world. So then, if there's problems, then you're putting your own reputation on the line to have Tesla's software in your car too. And I think a lot of people in the industry would be alarmed at that right now. Although Elon obviously is very confident that he's going to be licensing his system to others in the not too distant future.
You mentioned the bump. There'll be a little bump, but I think long term you would see a sales increase because if you look at consumer data, you can source this to Edmunds, you can source it to CarMax, you can source it to a variety of outlets, even Experian, for a matter of fact. Consumers are overwhelmingly voting with their wallets and pocketbooks and going towards hybrids. Both companies manufacture hybrids. If you put an FSD system on a hybrid, you're going to increase sales. You probably have a good 5, 6, 7 year run there from increased sales. That can become a determining factor of what model that individual buys. And then is there sort of a licensing rev share deal where that OEM gets a percentage of the FSD recurring revenue? That becomes an additional revenue stream. So I think it's a long-term bet. Listen, you got to move the needle somehow. You just can't sit there and be overly cautious when it comes to technology. You go all in, you get overly cautious. We've seen that doesn't work. The consumers like FSD. Is it the greatest product in the world yet? No. Will it be? Who knows? But consumers that use it overwhelmingly really enjoy it. And for highway driving, it works phenomenally.
It does until it doesn't, right? And I feel like this is where artificial intelligence and real world applications right now it's really good. It might be really good 99.9% of the time, but you and I know that in the auto industry, it's that those last couple nines that make a profoundly big impact. And how many incidents is NHTSA going to look past before they say, I feel like at the point, like there's obviously been a lot of autopilot and FSD crashes with stationary vehicles on the highway, i.e. fire trucks, law enforcement vehicles that are stopped at a scene. Like when one of those is fatal for a law enforcement officer or first responder, like that's when I feel like NHTSA is going to look at this more seriously.
Well, we can ask Jonathan Morrison. Hopefully he's the next NHTSA administrator. If it's President Trump, I'm publicly advocating for Mr. Morrison to be NHTSA administrator because he understands it. We are going to have a lot of questions, but as technology evolves, you're going to have hiccups. You want to see one of the saddest things in technology that's not talked about? We have a man and a woman trapped in space. The Boeing Starliner, and they're stuck. It didn't work. You put them in the SpaceX capsule, Dragon, they'd be home safe. They're stuck in space because the Boeing spacecraft does not work. That's a bigger problem. You're way up in the sky. With the technology on the ground will be fixed, but then you have this technology. And you know what the difference was? The Boeing was made by a legacy incumbent company. The SpaceX successful was made by, for all practical purposes, a startup. There's a comparison there.
There is a comparison there, and there's probably parallels, but I feel like space travel right now is so, obviously we've been doing it for decades at this point, but that's still so risky by comparison. You have to run the risk analysis and maybe the idea that Boeing has failed in many ways across all of its business lines is now evident again, and there's something to that. But to say that any other competitor might not be successful right now in the space side of things, it's still so risky. I don't know. I can't make a comparison there, but it's an interesting thing to think about.
If you think about that, so let's get to the ground side. Let's hypothetically say FSD licensed it to Ford. What if Ford was able to put their own guardrails on the system, perhaps put a driver monitoring system, perhaps do what GM does with Super Cruise of where you can and can't use it to add that, you want to call that level of supervision. What do you think around that? Because you can use that as a risk mitigation tool.
Yeah, that's true. Ultimately, I guess one of my questions would be if you're Ford in that scenario, let's just say you're seeding your dashboard to Apple CarPlay, if you're seeding your driving experience to Tesla, which is a far more visible brand name than Mobileye. What's left as an automaker that you are in charge of? Are you essentially Magna contract manufacturing vehicles?
What's left? It's a relic.
A brand.
Oh, I don't even really consider Ford a brand with all the issues that it's had over the years. It's a relic. It's sad. They had all these interesting opportunities to move forward, to innovate, but yet they shut down Argo AI. I'm not saying whether that was the right decision or the wrong decision, for the record. I'm saying it was a decision. And they have the Latitude program, but they don't have any autonomy program, which is going to become a big part of it. They tripled down on EVs, which has been a complete bust for them as consumers shift to hybrids. Ford seems that it's a ship lost at sea without a captain. And we have the financial results to prove it.
I think Ford has a lot of serious questions to answer for the long-term legacy of the company here.
What does Ford want to be? Do you shut everything down and become Ford Pro? I know that's a radical idea, but Ford Pro makes a lot of money. It's a healthy business.
It's an interesting question, Grayson. I don't have a great, if I had lots of great insights, maybe I'd be a senior executive at Ford turning the ship around, but I think they're in a very tough position long-term.
Well, you could be a senior executive because you have the insights. So I'll give you my opinion because you do have the insights, and I respect you being cautious. Let's hypothetically say they shut the car business down. The Sean Fain labor problem goes out the door because they're not going to be able to. They're not going to be able to withstand the UAW cost long term because we are on the brink of a potential recession. We're seeing consumer spending slow down. We have one to put two potential Fed rate cuts on the table now. I'm not going to say that the Fed's going to cut this month. I'm not going to say they're going to cut before the election, but I do think we probably get one cut, maybe perhaps in November, 25 basis point, maybe 50 basis point by the end of the year. And if you look at housing, the number of houses for sale is the highest since 2008, and consumers are overwhelmingly underwater on their debt, according to the New York Federal Reserve. So when you actually pull back from the stock market, you look at Main Street, it's not healthy. And those consumers buy Ford products, and it's not good for Ford. But on the business side, the construction, the heavy duty construction, that business is still booming. They have their labor issues, but it's still continuing to grow. So that's why I throw that radical idea. Or throw another radical idea. This will totally credit the company, but you unlock a lot of shareholder value. Does Ford spin out Ford Pro?
I don't know if they do, but maybe that's the more logical, less scorched earth candidate for something to happen here. That would make more sense, I think.
Yeah, something has to happen. It's a shame. It's an American icon. It says it's going to become a relic, but it's an American icon. It was part of the original Detroit Big Three, and now it's the two between GM and Ford. But GM just continues to out-innovate, out-maneuver, out-strategize Ford. And it's sad. You want a healthy competition in Detroit. It's good for the U.S.
You know where I see an interesting opportunity that Ford also lags on right now? You may remember that about 2 years ago, I think it was October 22, GM started its GM Energy business unit, which is coming out with household storage products along with, the vehicle, the grid charging equipment. Something that caught my eye on the Tesla earnings call. Tesla's stationary storage division, which has the Powerwall and the Megapacks as its main products, earned $3 billion in revenue in the second quarter, more than double the first quarter. I just think there's a huge opportunity there for automakers. And it's another example where like Tesla is a decade ahead of just about everybody else, but they're selling Megapacks that are going into huge, large scale battery farm projects that are going to back up the grid, back up data centers. Like they're way ahead of the game. Like it's problems aside with FSD and autonomy, just the way that Tesla has been at least a decade ahead on software defined vehicle architecture, over the air updates, making an EV that people want to drive, stationary storage, like $3 billion in revenue. It's a small part of their overall revenue right now, which is concerning with vehicle sales slowing. But 10 years ahead on this too. And I feel like we're going to look back in 2030, let's call it, and be like, oh, like very clearly everyone else is going to be running there. Like GM has already started. I give them a lot of credit for that. Others will follow.
Ford Pro Energy. They've got the customer base to do it. Right about Tesla, I've been studying the battery market quite a bit in the energy market and starting to really notice an interesting trend for data centers. You're seeing battery backup and nat gas backup. Tesla has the ability to all these large data centers sell these large clusters of batteries for the data centers, where if you're Ford, you have the ability, a lot of your individuals that buy your Ford Pro products work on construction. They build large residential communities, build apartment buildings. We have the ability to sell them batteries, part of their battery storage backup, because you already have the customer, you're already in the system, you have the ability to issue POs. You're right. GM understands that. Hopefully, perhaps months from now, a year from now, we see Ford go into the energy business because of the CATL relationship. But we saw today the Nikkei reporting that 35% of CLT revenue was supported by the Chinese government. And now Europe is saying, oh, no, you can't do that. So you go to another strategic blunder. Ford went all in on CATL. They could have went down to Albemarle in Charlotte, North Carolina and cut a deal, but they went to CATL. Why?
It's an interesting question. But yes, another road that seems to have run rocky at the very least. You know what I should say too, this is running down a different rabbit hole, of course, Grayson, but talking about Tesla and GM's efforts in the energy space. Toyota Hyundai, also really interesting. Remember at CES, Hyundai was all about hydrogen. And I feel like, especially in the commercial side, hydrogen has some really short-term barriers, but over the long term is really interesting, which is why I think you see Toyota, Hyundai, GM, and Honda continuing to make hydrogen investments. And, I know it's an alternative to an alternative at this point, but something that may have some long-term legs as well.
I'm very bullish on hydrogen for over-the-road long-haul trucking. If we can get the infrastructure built, that's the big key. Can we get the the infrastructure built. Toyota, everybody wrote them off. It's an extremely well managed company. A hybrid is the gift that keeps on giving for them. And they have the world's best hybrid technology. You can't dispute that. Yes, they went on hydrogen with the Mira, but you got to give them a lot of credit. At some point, they will come out with a battery solution. Perhaps the Toyota Energy is just extremely well managed company. What do you see as some of the biggest trends from the energy standpoint, from the autonomy standpoint, from the traditional OEM standpoint that we should keep our eyes on as we head towards the end of the year?
On the autonomy side, let's take those in two bites. I feel like the big trend that I see now, you mentioned Wave earlier, like we're starting to see investment again in autonomy and automation. So I feel like that's going to continue, as to use the Gartner terms, autonomy is coming out of the trough of disillusionment and onto the slope of enlightenment. I don't know how many players will be ultimately left. I think that's where maybe there's some continued winnowing, but that'd be one trend that I think is going to continue at least through the end of this year. On the energy side, I feel like you mentioned trucking, and that's where we see policy in California driving a lot of innovation right now, perhaps, because they have upcoming zero emission requirements, I think by 2030, but I'd have to double check that. But I think there's also starts to be some real world challenges when you go beyond pilot projects with battery electric trucks. They reduce payload. They take a long time to charge. Tesla Semi had some really interesting results where they're proving range at least. But when you want to charge a dozen trucks, you can probably do that. If you want to charge 1,000 trucks, like you said, the infrastructure for hydrogen is a challenge, but the infrastructure and grid requirements to charge lots of trucks, that's no less an arduous challenge ahead right now. And I feel like fleets make a lot of sense for either of these technologies to be the first application, but the infrastructure has to be there to support either one. So I would expect some investments on that side as well at some point.
The investments are going to flow. GM will successfully raise outside capital for Cruise. Alphabet will probably raise additional outside capital for Waymo. I wouldn't be surprised next year to go see Wave raise more money. You are seeing large, substantial dollars flow into autonomy. It's going to continue to flow into autonomy, but it's going to flow into autonomy with the companies with the right business models that make the right decisions. Pete, we always love having you here. I can't wait to have you back again. Knowing me, it's probably going to be in a month or two because there's a lot happening. But for today, what would you like our listeners and viewers to take away with them?
I'd say just kind of what I just mentioned before. Like, I think there's legs here, and there's legs for automation. There's certainly legs on the energy side of things. And especially as EV sales slow, and be that just a slow down in growth, some of these companies are going to be looking to see, what do we do with these batteries? What do we do with these cells? And I think there's profound opportunity in stationary storage. I expect that to be a trend we'll be talking about more in the months ahead.
It reminds me of this. What would you do for a Klondike bar? But it's like, what would you do for energy storage? It's going to play a large role. It's going to become a growth market. The future is bright. The future is autonomous. The future is making the right strategic decisions. Pete, as always, thank you so much for coming on the road to autonomy.
Always good to be here, Grayson. I look forward to next time already.